Hey everyone, welcome to The Loft and welcome to this week's video, which is going to be a company review, and we will be looking at the company Amgen, ticker symbol AMGN. Now, this isn't a deep dive into a company. This isn't me going through all of the 10Ks, going through the overviews, going through all of their annual reports. This is more of an overview just to get a guide of the company, see if it's something that we are interested in, if its financials hold up under a little bit of stress, and therefore we can then use that as an indication whether we should look deeper into the company and actually look at buying the company if we do think that they're relatively well off and if it's a company that we could be invested in. So for anyone that isn't aware, Amgen is a leader in biotechnological-based human therapeutics with a historical expertise, let's say, in renal diseases and cancer supportive care. So overall, looking at the last year of their stock price, they're currently sitting at a share price of $238 with a varying amount of history, a lot of ups and downs in their share price over the last year. There are highs of $258 and lows of $216 over the last year. Jumping across to the company, we'll be looking over a 5-year period on all of their statistics, so all of the bits that we'll be looking at. And the main areas we'll be looking at are going to be what forms my BPI score, which is a scoring matrix I've made specifically for reviewing companies on these videos. And the metrics that we will actually be looking at include dividend and the dividend growth, net income, free cash flow, debt to equity, so their liabilities and their assets. We've also then got the payout ratio and the shares outstanding for a company. And then finishing it off, we look at the return on equity, the profit margin, and the price to earning ratio of the company. Once we have these, we'll be going from giving them individual scores, depending how good they are. And then it should give us an outcome score for the overall company based on the metrics that we've looked at. So let's not delay any further. Let's jump in and have a look at the finances. And we will be starting with Amgen and their dividend and their overall dividend growth. So we can see by looking through their past history that they have had a growth of around 75% over the last 5 years with a mean yearly average growth of 12%. To give us a comparison against companies in a similar sort of industry, we'll be looking at J&J and AbbVie, and we can see on a comparison basis that Amgen are growing their dividend at a quicker and stronger rate than Johnson & Johnson. However, it is slightly lower than what AbbVie are doing in regards to their dividend growth. Overall, it is quite a nice, strong amount of dividend growth. 75% over the last 5 years isn't particularly a bad number. So I will be giving it a score of 4 out of 5. Which is above the ideal level that we would be expecting to see for the company. Now we can move over to the revenue, net income and free cash flow. Now revenue, we can see that it has increased from 22.9 billion to 25.4 billion, which is around 10% in growth over the last 5 years, which if we look at the comparables, so J&J and AbbVie, we can see it is a lot lower than what we would expect compared to those two companies. Due to this, I am going to be scoring it a 2, which is below the ideal levels of what we're looking at. And then we can move over to net income. We can see that in regards to net income, all three companies we're looking at, J&J, AbbVie, and especially Amgen, have had a drop over the last 5 years, though Amgen's drop is the lowest, with a drop of around 6% compared to 11% and 22% of the other companies. Due to this drop, I'm going to be giving the company a 1. It is very below the ideal level. We don't want to see this dropping, but it is. So we will be giving it a score of 1. Then we can move on to the free cash flow. And this has actually been increasing from 8.8 billion to 9.8 billion. So gone up a full billion. And this is roughly a growth of about 11%. And the comparable companies have 44 and above. So I'm okay with the growth, but I'm aware that it's not as high as it could be. And we'll be giving an overall score of 3 for this particular company, wishing that it was slightly stronger, but it is in line with what we roughly expected. Moving across to the assets versus the liabilities, which is the next post that we'll be looking at to fulfill this criteria. We can see that Amgen currently has assets of 21.3 billion versus a set current liabilities of 12.8 billion. So overall, this is quite good. They can pay off all of their short-term liabilities with their short-term assets and cash equivalents. However, if we actually widen this net a little bit further and we look at their overall, so their total assets and their total liabilities, we can see that Amgen has a total of 62.5 billion in assets and 53.2 billion in liabilities, which means that Amgen could pay off every single debt and liability that they have and still have around 9 billion in assets waiting around. Obviously, that's not the best way of doing business. They actually need some of those assets to produce the products that they're making. But it is good to know that if they wanted to shut up shop, they could pay off every single debt and still have 9 billion in cash or cash equivalents waiting around to be given back to shareholders on a liquidation. Not that that's going to happen, but it is very hard, in my opinion, for a company to go bust and go out of business if they have enough money to pay off all of their short-term and long-term debts if needed. So next is the payout ratio. Let's move over to the payout ratio, which is for Amgen a score of 54. And this is a cash payout ratio of 38%. So this is a nice amount of buffer for the payout ratio. It means that any dividend that they are going to pay, they should be able to cover, and there is room for it to increase over time. So for these two, looking at scorings, I will be awarding a score of 4 for both their cash assets and liabilities, and also for their payout ratio, because I feel that both of these scores are quite high. It is good to see on the assets that they can pay everything off, and it's good to see that there is room to grow on their payout ratio, so they have got room to grow their dividend. Next, we have our shares outstanding, which is decreasing, which is good. A lot of people will look at graphs and they like to see things going up, but in shares outstanding, we do like to see it decrease. We have seen it drop from 586 million down to 574 million. Overall, this is a drop of about 2%, which could be better, but compared to J&J and AbbVie, they have had increasing shares over the last 5 years. Due to this, I will be giving the company we're reviewing, so Amgen, a score of 4. They have been able to decrease their shares outstanding, which has essentially made it better for us as investors, and their competition haven't. They have actually been adding more shares and devaluing the current shares of any of their current investors. So overall, we will be giving a shares outstanding score of 4. Next on the list is the return on equity. And if you are interested in return on equity, how it works, how you can calculate it and everything like that, I have recently done a video on it. So feel free to check down in the description below where hopefully I've added a link. However, if I haven't added a link, it is on the channel. Just make sure to subscribe before you leave because it really does help the channel out. So moving over to Amgen's return on equity, this is sitting at around 70%, which is a lot higher than their competitors, with AbbVie being the closest with a return on equity of 52%. Here I'm going to be awarding a score of 4 for Amgen, as they seem to have a decent amount of profitability, with the industry average being around 21%. So a final score of 4 I feel is good to represent that they are doing better than the average. Finally, we come to the actual PE ratio, and this one is trading slightly higher than we would like, with a PE of 19.78. However, it is lower than the sector average, with the sector average being 23.6, though it is still higher than the ideal level of PE ratio, which sits around 15. So I'm going to give it a 3 here because I feel that it is in the realms of ideal. It is slightly more than 15, which people tend to use as their benchmark for PE ratio, but it's nothing like a PE ratio of 600 Tesla. That could potentially raise some eyebrows. So overall, I will be giving it a score of a 3. Now, this is the final box that we've completed. So we now have the ability to generate a BPI score. A BPI score is something that I've created, and I called it BPI for Ben Page Investing, partially due to my ego, because who doesn't like to have something named after them? But second of all, because I needed a name and it sounded a bit like the BMI score, so I thought it would be convenient. So I stole it while I could. To break down the BPI score a little bit further, we have the BPI-D, which is the Ben Page Investing Dividend Score, and the BPI-G, which is the Ben Page Investing Growth Score. Together, these are then added and divided together to come to a mean average for the overall BPI score. In regards to Amgen for today, they have a BPI-D score of 7 and a BPI-G score of 6, which has given them an overall BPI score of 6, which is classed as an average score. So 6 is given the wording average, meaning that it is a okay to good company to look at, following these particular metrics that we've looked at. Now, that's all well and good, but I'm sure there's some of you out there that don't really necessarily care. You already know the finances of the company and you just want to see possibly a value or potentially a value you can use. So for those of you that are value investors out there, I'm going to go through and look at a discount cash flow model for this particular company and see if we can come up with a intrinsic value for the company. So running through a discounted cash flow valuation, we will be using a rate of return of 12%, and mainly that's because I feel that it's a good in the middle mark for anyone out there that's looking for a rough pricing. Obviously, I would suggest do your own pricing models, your own build out of where you think that they're going to be in the company in the future, and then use that to get to your price for today. However, I feel that it is useful to essentially give some sort of value at the end of these videos. So using a 12% rate of return, the discounted cash flow model brings out a company value of $236, and for the value of the equity of the company at $154 per share. This means that with no margin of safety, Amgen is currently close to their buy price, so it may be worth adding a tracker here just to see what's going on and if it does drop below this value. If you are interested in the prices with a margin of safety, because obviously that's quite subjective, I've added in this breakdown here, and this should show you essentially the entire breakdown between 1% to 60% and the overall price that it would be if we took into account that percentage of margin of safety. So for an overall breakdown, this company had a BPI score of 6 with a BPI dividend score of 7 and a price target around $236. As always, don't take any of this information as an indication or whether you should buy or sell a company. Always do your own research and actually double check any figures that anyone on YouTube or anyone ever gives you. It is always good just to go through and double check to make sure you are aware of what's being told to you so that you can make the best investment choices for you. Because the last thing that I would want is you to see this, buy a company based purely on this video and then be upset about it. Always do your own research, please. Just for me, it would make me feel a lot better knowing that you are out there doing your own research on companies. One caveat to this, I do want to let you know that I do own this company, or I have owned this company in the past, either or. And there isn't any bias to me telling you that it's a better company than it is. Some of the companies I held or have held or do hold weren't particularly the best, and I'm not going to try and make them all singing and all dancing when they're not. So go through, check your own thing, but just as a caveat, I do own this company. And also, you may have established that a lot of my BPI scoring is entirely subjective and it's kind of based on my opinions. So do take that with a pinch of salt. If you're interested in other ways of valuing a company that isn't the discounted cash flow, maybe based on their PE ratio or something similar, I would suggest checking out this playlist here, where I break down various different ways that you can actually evaluate and try to come to the intrinsic value of a company. But until next time, remember to invest, save, and subscribe.